Is the key level for the S&P 500 on a chart of the yen? Welcome to Trading Nation. I'm Dominic Chu. We got Chad Morganlander. He's with us from Washington Crossing Advisors. Boris Schlossberg is with BK Asset Management. Boris, we're going to go to you first because you are the currency guy. We're going to go back to my roots as a currency trader back in the day. We know the yen is always a risk proxy, but you're seeing something a little bit more perhaps. Tell us how the yen is going to play into how stocks in the U.S. perform.
Well, I've been arguing for a very long time that dollar yen at 110 level has been a crucial level of support for the pair. And it's actually been able to hold that 4, 5, 6 times over the last several weeks until yesterday when it gave way. And I think that's a very serious sign suggesting that risk off is really starting to permeate through the markets. Because in my opinion, yen always leads the markets in terms of risk off sentiment. The fear shows up first in the currency market, spreads over into the equity market afterwards. And I think what you're seeing right now is investors getting very concerned about the geopolitical situation in Korea, about the general tightening of credit conditions, and about the fact that there is very little progress on the reflation front out of Washington, D.C. All of those situations really augur for a correction in the equities, and I think the yen is signaling that's really going to be happening.
All right, so the chart we just showed there showed everybody basically what was dollar weakness and yen strength overall.
Right.
So as people come to buy in yen, it's almost as if they're buying the safety of the Japanese currency, covering some of those risk bets out there overall. Now, of course, maybe it's a catch-up trade, maybe it's not, but Chad, are you looking at the S&P 500 and the overall markets in the U.S.? Do you care about what happens to the yen, and what's your view on where we go fundamentally from here?
So I totally agree with Boris that the yen will continue to accrete in value and that financial conditions overall are going to continue to tighten. We believe that the yen can go to perhaps 105 over the next 3 months. We do think the S&P 500 is, let's just say, somewhat frothy at this point. We're expecting low returns for 2016. We may have 17 rather. We may have already put that in. Overall, though, we do believe that the long end of the yield curve also is suggesting that perhaps the U.S. economy isn't going to accelerate all as much as the market expects. So we would be much more, let's just say, balanced within a portfolio at this point, especially on the equity side. That reflation trade that you saw over the last 3 months, we believe is going to start to roll over, and you want to go and move up your quality spectrum on the individual companies that you do own.
All right, so up the quality spectrum, kind of balance things out a bit. Where exactly are you rotating into? What are you doing with client accounts here, Chad, given the fact that you think this is going to happen?
So we think that there's going to be a flattening of the yield curve as the Federal Reserve continues to raise interest rates and signals that they want to reduce their balance sheet. So we would actually look at perhaps intermediate bonds at this point. We don't think that there's going to be a surge of inflation at all. And as well, one should keep some cash on the sidelines because you can see seams of opportunity if you start to see a dislocation within the credit markets.
Boris, I got to tell you, back in the day, when I used to look at this stuff constantly, the yen was always important, but rather than dollar yen, we always focused on some of the commodity crosses with the yen, right? Aussie yen, Kiwi yen, right. Canadian yen. Are there any other place in the markets in the currency side of things that you're looking for any clues or tips into that whole risk-on, risk-off mentality?
It's interesting you bring up Aussie, which has also been starting to really crumble. Aussie gave up the 75 figure just the other day and has been weaker on a weekly basis also. So I think all of that is it's really signaling to the investors that the risk-off trade is on. And that should be very much of a concern to equity investors. Just one sort of a giveaway. You know, dollar yen peaked in December. We've had a big disconnect between what the currencies have been saying and what the equities have been saying. And I think we're now reaching a breaking point where the currencies are really signaling that equities need to come in and correct. And I think that's really what's going to be happening over the next couple of months.
So watch the yen in addition to gold prices, the yield curve, what's happening elsewhere in the market overall. There are some warning signs flashing. And thanks to both of you guys for bringing that up. Again, to Chad Morganlander, also Boris Schlossberg over at BK Asset Management. Thank you guys so much for joining us here on Trading Nation. And thanks for watching. My name's Dominic Chu. We'll catch you next time around, tradingnation.cnbc.com.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.